Hello everyone, good morning, good afternoon, good evening, depend on your location. This is Dr. Marangis from DMAX Digital Academy, or I can say from Marangis Forex and Crypto Trading Academy. So in today's class, I'm going to teach us the candlestick patterns, but these are not completely the candlestick patterns in all. What I mean by that, I mean this is not the only candlestick pattern that we have in the space. So, but I'm going to give you, these are the main important ones. Among the rest, these are the most important, are commonly in use in the trading space. So I will quickly go for what I'm going to teach in this class is that I want you people to know how to identify them in the chart, how to trade them in the market. So let's get started. I will not waste your time. I will start explaining the bullish ones. Why? Because in a trading space, we have the bullish and we have the bearish market. These are the only trade that we are trying to catch. We need to catch either sell market or buying market. But we have the market have the market basically have three moves. There is bullish movement, there is bearish movement, and consolidation. Once the market is in an uptrend like this, we call it the bullish market. Once the market is coming down like this, downtrending, we call it the bearish move. And we have the consolidation. The market have no direction. It is moving sideways. So now I'm going to start by explaining the bullish engulfing candle. This is what we call bullish engulfing. I want you guys to understand what is bullish engulfing. This is bullish engulfing. So bullish engulfing is a candlestick pattern that showing us the direction of the market is in bullish. It is not happening when the market it is in bearish. No, the bullish engulfing, you will not see bullish engulfing in the market once the market it is in downtrending. Or it is in uptrending, sorry. The bullish engulfing is happening when the market is in uptrending. It is in downtrending. Once the market it is down, is coming down, once bullish engulfing appears, so it means a rejection to the upside. So bullish engulfing basically is a candlestick pattern that's showing us that the market will reverse to the opposite. If you see the market it is in downtrending, you will wait. There are so many process that you have to implement in the trading space, but we have the key things to consider. Whether you see the change of character, whether you see the fair value gap, or whatever the techniques that you are going to use into the trade, you need to what? If you see this kind candle, one bearish candle like this with the small body, and you will see the bullish candle. Maybe it's a bearish candle that will come down, and then the buyers push the market up to the level of the candle close above the previous bearish candle. I don't know whether you understand the point. I mean, this candle now is a bearish candle before. The buyers, the sellers push the market down, and then the buyers reverse the market with the preview, and then they didn't stop anywhere and they close it. They stopped at the above of this candle. So this is what we call the engulfing. So once the current candle engulf the previous, it is indicating the market will go up. All right, so I will go to the opposite of it. I will do it this way. If I do the up one, the bullish one, I will do the bearish one. The bearish one is similarly the process. The same process with the bullish engulfing. This is what we call the bearish engulfing candle pattern. What you will do in the market, you need to concentrate. You don't have only one techniques to execute your trading, my brothers and sisters. So what you will do, you need different kind of techniques. So in that techniques, you need to know if there is rejection in the market, what and what am I consider? So this bearish engulfing candle is happening once the market is going up. Market it is in uptrending, and then the market come created the bearish candle that engulf the previous, the candle that second candle before the current candle that engulf the second candle. So now if you see the market, automatically there is something in a market structure. Once we said break of structure, a change of character happens. Change of character is happening if the market is in uptrending this way. The change of character means the market come and break this place here. So before this market happens like this, so you must see the bearish candle, big bearish candle. Check all your chart, please. You will see a big bearish candle. Whether it is like this one or not, you will see at least the bearish candle at the end of the market. Then you wait. The second candle will give you confirmation that the market automatically will be bearish. Once you see as the market is going like this, you see the candle, bearish candle here that engulf the bullish candle that hit the market to the level, this level. So now this candle will not sufficient, it's not sufficient for you to execute your trade. You wait for the what retesting or confirmation. If you see another candle, red candle created like this, so now we have the change of character. So probably you must have at least either fair value gap around these areas. So you are going to place your order around the what? The fair value gap. If you don't know the fair value gap, in the next class, we are going to explain the fair value gap. This is the action of bearish engulfing candle. The bearish engulfing candle is a what? It's a bullish rejection pattern candle pattern. Once you see this one in the market, automatically the market will what? Is automatically the market currently is in uptrending. Once this one appears, means there is rejection to the opposite. So you take note of that one. And then we go to the evening and the morning star. This is what we call the morning star. The person that give this pattern's name is a Japanese guy. So he used his own techniques and strategies and provide all those names based on his theoretical experiment. So now, this is a morning star. The morning star happens with the three candles. The first candle is a big bearish candle, like you are seeing in the screen, on the screen like this. And then the second candle has to be what? To be smaller body like this. But it's a bearish. After that candle happens, you see the green candle come close above little bit. Whether it is above, take note of this, whether it is above or equal, all the theory is what completed. Once you see something like this, you will be able to do one or two things here to execute your trade. It's a what? It's a rejection pattern. This one is happening not in a what? In a downtrend, in an uptrend. Anything regarding the bullish, if I said this pattern is a bullish rejection pattern or buying rejection pattern, it means the market logically is been going down. That is whereby we are going to see this one. If we say the bullish, we mean buy. Where are we buy? We are buying the low and we are selling the high. So you guys have to know that any market that you are going to enter, if it is buy market, you are going to enter from the bottom. That is the low zone. If you want to sell, you will sell at the high zone. right? I don't know whether we understand, my brothers. So that is it. So now this pattern morning star is a reversal to the what? To the bullish direction. So morning star, this is the structure of the morning star. The way you are going to trade this kind of pattern is this. You need to check. If you see it on the 15 minute, if you see it on the 1 hour, that is the signal is very strong. This is the secret of trading. Let me give you. If you see any kind of rejection pattern, whether it is bullish or bearish, in a 5 minute, it is not stronger. In a 1 minute, it's not stronger. Why? Because there is too much of noise. Market is what fluctuation very high at that time frame. But in 15 minutes, it's a logical thinking. You need to logically think the person that have to display the displacement between the time. Let me do it in the physics terms for science students. So in the displacement, the 15 minute is more longer than 5 minutes, and then the 5 minute is more longer than 1 minute. The 1 hour is more longer than 15 minutes. So in that case, you need to understand and make it so logical. Think this market before the market reaches the point of interest, that is the POI, it will be taking time, and then the market gets some logics that many traders doesn't know it. Market is like a car moving from far place. The car that makes a long journey and the car that makes a short journey. The engine oil work is quite different from what each other. The one that is in long journey, the engine oil may be what? Probably spoiled or weaker than the short move. Why? That one engine works so long time. So that is how trade is acting. If you analyze the 1 hour move market like this, before the market come to this area from 1 hour, it will be take longer. Each candle, as you see it, let me give this example with this one. If you see this kind of candle, meaning 1 hour candle. If it is in 15 minutes, meaning 15-minute candle. So this is how you are going to analyze your analysis, my brother. So basically, this morning star, it means the morning star meaning rejection pattern from the upward. That is the bullish rejection pattern. So let me go to the opposite of the what? The morning star. We have morning and we have evening. So this is an evening star. It's an opposite of the morning star. It's a rejection pattern. It's a bearish rejection pattern. I don't know whether we understand. So the morning star is try to push the market up. Understand? So the morning star, once the morning star happens, is happening at the bottom of the what? Of the chart. And this one is happening at the what? At the top of the market. That is the high level of the market. Once the market would play a role. If the market is trying rejection, the smart money stop moving the market, you will see several things, signs. Some you will see liquidity sweeping, a candlestick at the top of the market like this. It's a green candle, but it has already gone automatically, deliberately to remove those people that they have order from this level, for example. So this week automatically remove everybody that have place order here and place stop loss here. So liquidity sweeping, I'm going to come, I will give a class on that, specifically liquidity sweeping strategy to execute market. So I will not bother myself, so that I don't want to take the video so longer, but it's a class. You must watch it whether it is 10 hours. I know. That is whereby I am trying to explain it in details. You people should understand it in a good way. So the evening star is happening at the top of the market. Once you you just logic, you don't need to be in haste with the market. The market is like an army barrack. Every soldier will die and leave the barrack there. So the market is still remain forever, and you will die, or your money will finish. Then you leave the market, still is existing. So what you will do, try and be patient with the market. Try and be what? Be patient with the market. Don't be in hurry. Let me put it this way. Don't try and say it, I must enter market. No, the market is not like that. The market is all about opportunity, not about your what needs or desire to enter the trade. So once you try to, chase the market, then you will surprise. The market will surprise you. So don't try and be in the haste in the market. Try and calm down. Control your emotions. Be patient. Don't be greedy. I will come for that one. That is the common mistakes of beginners. Don't be greedy. Doesn't know where to place your stop loss. Understand? uh, Being chasing the market, these kind of things I'm going to explain them in details, inshallah, in the next class. So now I've already finished with the evening star. Evening star is a rejection pattern to the what? To the down. This is a selling market reversal pattern. So let me go quickly with the bullish pin bears. This is a candlestick pattern rejection at the down bottom of the what? The market. It's a bullish reversal pattern. Why this logically become a bullish reversal pattern? This is it. This is what? It's a green. It's a bearish candle. This one is a bearish candle that have a long tail, like a sweep. It's like the liquidity sweeping. It is happening. Probably this candle will not be happens like this. Let me show you something. It won't be happen like this. I don't know whether it is my own exaggeration of the market is very low. This candle will not happen like this. It must happen like this. Sweep the previous liquidity from the previous candles. This is how this candles has happened. Usually more than 95%. I don't know whether we get it. Okay, this is a bearish, it's a bullish pin bar. Bullish pin bar is a reversal pattern to what? It's a bullish reversal pattern. This is the bullish pin bar. So bullish pin bar is happening at the end of the what? Of the market. Why it's happening at the end of the market? Why we call it the reversal pattern? It's a very powerful signal. Once you see this one happens, I don't want you to do, waste time. Just execute the trade. But sometimes the third candle will correct like this. Make a correction and been going up. But if you see this one normally 80 to 70 to 75% to 80, it's happening to be continued pattern. Why? Because the power in this signaling in these candles is very powerful. Let me explain. This is a red candle. It's completely red candle up to this level, and then the sellers push the market. They try to close the market here. The buyer says no, and they push the market up to the top level, and then sellers get strength a little bit, push the market, but they fail to close at the down. They close it here. If we calculate the power, you follow the person 80%, and that person push you back up to not less than 60% to 70%. It's 70%. So the strength is very what? The strength is very powerful. And then also the second candle too, something interesting happens like that. bears push the market to the downward, and then the buyers push the market up to this level, and then the sellers try to enter this market, and the buyers close the market here. But let me explain something that maybe you people doesn't know it. If the buying candle is opening from the down and closing at the top, and the selling candle is what? Opening at the top and closing at the down. So that is how the candlestick. In the previous class, I give a class on the what? Candlestick anatomy. I did that class. So if those people that they knows the candlestick and candlestick anatomy, they understand this nature. So that is it. So let me quickly go back to the bearish. The bearish also the same pattern, but it is opposite. This one is happening at the top of the market. Since that it is a bearish, once we say something is a bearish, it must be happen at the top of the market, be coming down from the external liquidity or up recent internal liquidity. Somebody will tell me that, doctor, we don't know what is that external liquidity and internal liquidity. Go to my videos. This is a special class, but I give it on my YouTube channel. I give it on my YouTube channel, the internal and the external liquidity in vibrant distinct explanation. But this is a course. What I'm going to say it here, it is not possible to say it where outside on the social media. There are so many things that we are serving those people that they paid money to what? To grab the knowledge directly. So it is not something, the same. But we are trying our level best to orientate you as a newcomer. So that is it. Let me quickly go to the next bet. I don't know whether you people understand it. This one, this candle is an opposite explanation with the what? Bullish pin bar. This candle is a green candle. It's a green candle up to this level, and then the sellers push the market and close it here. And this is also another green candle. They try to close above the candle, and then they fail it. Sellers push the market again up to this level again, second time. So the third time maybe the buyers, and they try to push the market to the half level or quarter level, then the market will continue being coming down. That is whereby we are going to talk about I'm going to talk about the fair value gap entry, the order block, and the rest. But this one supposed to know before we go further explanation regarding the smart money concept, ICT, CRT. So the CRT, I'm going to give you an explanation regarding the CRT, candle range theory. This is candle range theory, but I am not touching some, interested part of it. But if I am coming to the candle stick theory, I'm going to tell you a brief explanation. It has to be summary. Why? Because I've already done the 80% here. This one, the candle distance, I'm going to tell you this is, if you see the candle sweep the liquidity here, this is what will happen. And if you see this and that, this is what will happen. But the important of this candlestick pattern to understand it is what? Some people, they will see it. There are so many markets you will enter. You can enter it with this pattern. I have many students that they have this kind of movement. I have some, Abdul Rashid, Michael, Joshua, and Mohammed. These people, I took them personal, that is private class, but they are perfectly in trading patterns only. They are not moving the market structure like this. No. Once they follow the market structure, what they are looking for, evening star or morning star or pin bars or liquidity sweep. So I'm going to give a class on that one. But all those class I give it in Hausa language. That is whereby now I started with English language. Most of the people, my own problem is for you to understand what I'm saying. I am trying to deliver something to you which is very important. But if you hear my English is not correct, but you supposed to understand what I'm saying. Hausa language is my language. If you come to Hausa, I will just keep you aside and giving you a lecture on Hausa language. This is not my language. I borrow it, but I'm trying, I know. So let me quickly try and complete and finish this one. The bullish Harami. We have the bullish Harami. There is something from the beginners. This is all this class is entirely the errors is coming from the beginners. The beginners, once they see the green candle, they begin buy. Once they see the red candle, they begin sell. It is not something like that. That is whereby I'm telling most of the people one strategy will not, it is not sufficient for you to what? To master trading space. You will never be profitable with one strategy. You will be profitable, but if you logically enter that strategy, there is another strategy, enter that strategy. That is whereby in my strategy class, I am given three kind of strategies, which is their combination is very accurate. So now, this is what bullish Harami. The bullish Harami, it happens like this. Once you see the green candle, this is a green candle before, and then the sellers push the markets. They push the market from the upward and they close it here. I told you. I spoke it previously. I told you that the sellers opening is where? From where? From the top of the candle and close at the down. So now the sellers push the market and they close it down. Now the buyer says, no, we are still active in the market. This space, as you see, is something interested you guys have to know. The candles are ranging. This is what we call, if you know, even in my videos, previous videos, this is what we call the FVG. This space that happens. Then this small green candle didn't open from the bottom and close here. No, because of the speed, the money in the market jump to the quarter of this candle. And the candle open from here and with the preview and close here. This pattern, if these patterns happen at the top of the market, it is means, doesn't mean that the market is going where? Doesn't mean the market is going up. Sometimes the market will come down. But if you see it at the bottom of the market, down, I mean from the down, it's a what? It's a bullish reversal pattern. Logically, must happen at the down of the market. Must. That is how it will be. But sometimes halfway of the liquidity is depend. Now, I say from the bottom, don't think I'm talking about external liquidity all the time. Let me clarify you this, please. If the market range, before you enter the market, what you will do is check your internal and external liquidity. Once you understand them, where are they placed? So you have already done everything. Now, this pattern can happen like this. Market comes to this halfway. This is internal liquidity, and we have the external liquidity here. So this pattern can happen around this area too. No problem. The profit between from here to here is a something. It's a reasonable amount. Whether you go with the low load, let me put it this way, 0.02 or 3. But some criminal traders that they are using one lot, this is a huge amount of money. I can't predict it. You understand? So this is the action of what? Of bullish Harami. It's a what? Bullish reversal pattern. That is it. Let me quickly try and conclude the class by the explanation of bearish Harami. I don't want to reach like more than 30 minutes, but unfortunately I reaches. So now this is a bearish Harami. It's an opposite of the bullish Harami. This is a reversal pattern to the upward to the downside. This is a bearish reversal pattern. If you see the big candle, big green candle that is opening with the preview, don't mind with the preview that it has. You want to consider one thing. The jump that these sellers did from here. From this area, from this zone, the sellers didn't open the market from here. They jumped to the body of the candle and they entered the market and closed with the what? With the power. This Harami, the Japanese that they give this theory to us and we are working with it sometimes perfectly or perfection. I call it that way, perfectionally. So he called this Harami is like a woman with the what? With the belly, the woman that is pregnant woman. This is the example that he gives. So this is a seller's pregnancy. I don't know whether you get it. And this is a buyer's pregnancy. So all in all, this one is a bearish and this one is a bullish. The way you are going to enter market, once you see them, it means the market will be what? Going to the opposite. You will not see this kind of pattern at the down of the market. You can see it at the middle of the market, not even the middle. I advisably, all these patterns, all in all, completely that I teach now, please try and took them from the bottom, close to the external liquidity, please. Whether the bearish, try and take it to the upward. You wait patiently and see the reaction for this pattern. You check it quickly. Your brain must be what? Duplicate the work. Your brain has to be double the work, please. Processing. So your hippocampus supposed to be what? Think very faster. Why? Because I use hippocampus. I'm a medical personnel too. So the hippocampus is something in the brain that try and make you remember something which is very long time. If you are in the trading space, you are forgetting many things. So you need to think. You understand? So that is it. All in all, if you have any question, you can ask me privately. This is all in all for today. Thank you.